Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today with China down 5.3% overnight. You had the European indices down. You had Japan down a little bit, and our futures are down, 14 to 17 handles. So we were kind of in no man's land, right? We broke some levels last week, or in the last few weeks. We had some of those faulty signals start to add up. So today we're like, okay, what do? We're opening below the 100-day. Now, how much time in the first 30 minutes, or can we stay below the 100-day for 30 to 75 minutes, kind of like we did with the 50-day, to see if more weakness comes in. Today was one of those days where I'm like, you know what? It's hard to short, considering the size or the amount we've been down over the course of the, since May 22nd, let alone last week or from last Wednesday. But it might not be the exact time to buy some of these things because there's still pressure and, we're still above the 200-day, above the April support, but we're kind of like at levels where you don't want to miss a rally, especially if you sold strength and you want to be kind of involved. So one of those tricky time periods where you have to shorten your time period, shorten your scope of stocks, maybe trade more for 5 and 15-minute charts, and definitely on the way down, do a level versus a level where you might get some paper cuts, but at least if you find that level that's good, and then you use the prior day low as a pivot, you might get a nice little, actionable extra trade, and then you manage it and you move on. So you look at the chart here of the SPX, and you will see that, here was that outside day. That was May 22nd. Here was this upper wedge that resolved to the 50-day. This was your pushback to resistance. This was your double bottom of the 50-day. And then right into Big Ben speaking, the market tried to break out, and what happened? The Wednesday, it failed. This was your exit point. This was your invitation to say, get out, maybe get short. And then on Thursday, you remember, we opened with a gap down into the 50-day. And, we hovered there for a while for the first time in all of really 2013, and then we accelerated through it. We also accelerated through a trend that's been intact since November, okay? And I know we had a little bit of a reversal day on Friday, but it was quad witching, so I don't think anyone really got, all excited about it. And then today, we are below the 100-day, stayed below it, and then kind of rallied off it, which makes it like, okay, well, we're above here, we're above the 200-day now, we're kind of in no man's land. What do they want to do? You have resistance right here, okay, and then also again right here. Do they want to bounce us back with the end of the month coming in on Friday, the end of the second quarter? Do they want to maybe make things look a little bit better? At this point, you don't really know. You can't just trade for a potential window dressing, but today we did come off our lows a little bit, and it looks like it's worth a try. You look at the spiders, you probably get another chance anyway. This was your close of 157.06. Here's your new point of reference. Point of reference right here being 155.73. So with that said, that was like halfway into. Remember we talked about like some micro points. Here was a micro point, because sometimes they don't let you get to the more macro point, at least not yet. So again, 1, 2, 3, 4 on the fourth day makes it a little tough to press shorts, but it doesn't mean it's necessarily the time to buy. So you got to be that much more selective. We talked this morning about sectors that might help lead us off the lows, and I'm not going to get into them because they really look pretty similar to the spiders. I'll go over one or two of them. You go over the XLF, you will see, here's that trend line that it kind of pierced through, but didn't necessarily close in the lows and held the 100-day. 4 days down into support. They were weak today. There was no power in the financials. If usually when you get a fueled rally off the lows, the S&P goes down and the financials start perking up early. Didn't happen again today. They were weak and they had a hard time coming off the lows with the spiders. Here's support that it did hold going across, but here really is that major support which coordinates a 15.35. But at this point, still showing a little relative strength, but you broke this upper wedge, and now you're hanging out here. As far as the home builders, they too, first time you get to the 200-day, typically you try and bounce off it, see how it acts around here. It's been weaker. This trend line that's been intact for a while, below it. It was first down here before everything else anyway. I know this little potent move up into that, last week's move made it hard to stay short, but then you could have re-shorted when it got engulfed, and now it's probably going to need to do some time around here, maybe digest and perhaps get a little bit of a bounce, but we'll see. And then like with leading stocks, we were talking this morning, what could go green? Could any stocks go green? Tesla was a candidate. It's been one of the strongest stocks, and it showed relative strength early, and some guys made some money trading there. Whether you took it long or not, who knows? All I know is that, The 21-day, which it's been riding for a while, it came in, held, and closed pretty well. If this market does get some footing, you better look here first, because shorts would probably get squeezed above this area. So all in all, still in the game, still above this trend line. See if that continues. Google really didn't show much strength. We talked about how to maneuver it, and you see here how here's was a descending channel. That was that little topping tail. It's now down 4 days. It did close a little bit off the lows, but still not much power. People looking, are a little skeptical about being in these high-priced names. So, but at least now we have a new point of reference, and here's the 50-day below it. Netflix did a little bit of a better job going positive. All in all, still above the gap. This time wasn't as powerful of a bounce. Last time on the 50-day, you had a nice red dog reversal, and then look what it led to here. A little bit lethargic. So this is like merely a micro scalp. Anytime you tried to add to this, it kind of hurt a little bit. Amazon, out of all the stocks out there, is still, we're trying to hang around. I feel like I drew this today. If it broke here, look at that level, and that's the level that held for now. But still, these things are not going because of what's going on in the tape. I did tweet this morning about perhaps looking to, if you trade shorter term, look for a little bit of a cover, with the TLT, considering the size of the move. And you did get, a little bit of a red dog reversal here. So if you were short after this gap down, or you shorted here when it broke 116, why not cover a little bit? See what type of counter trend move we have. If there is none, you really know rates are going higher quicker. But anyway, this was one spot. Same way with the TBTs. Small doji, I wouldn't say, run for the hills, but if you got long on this gap up, or got long when it broke above 66, or when it closed above 70, why not take a little bit off into 76? Maybe you get a little bit of a downward move and you could trade that. But if it is a longer term, 6-month, 12-month, 18-month thesis, make sure you hold some, because you might not get back involved. Goldman coming right into where it broke out from. Didn't really get much of a rally. It's come down pretty sizable. Tomorrow we'll see what happens with it. Maybe we'll trade it versus slow. But again, it's in the middle of like no man's land. You're below all the moving averages. You're above the 200-day. You held the prior pivot, but look where it came from. So this, seems like there's no rush to be buying it. This would be a very constructive spot to hold, but it's hard for the market to do that right now. Gold, it's gross. But anyway, for now, still holding this little area, this little 3-day move. If we were to break this, you'll get another discount. You look at this chart, guys are getting paid staying with this trend, and this trend has been to the downside from, the intermediate trend break right there to the macro trend break right there to the recent closing the lows follow through. And now, you have some micro points. This right here is a micro spot, like 118. Here where it broke out from, this prior peak here was 123-ish. That's where it held. So, this would be a new zone. Hard to be short here, but if it were to break it intraday, maybe you try some. And then, I still don't think it's worthy of a long, even if it does bounce. It's just so lethargic and so not worth it. So anyway, that's gold. Well, also some people, FSLR had some strength early on, and then it kind of burnt loose or burnt out. Some shorts got scared, and you had some buying coming in right into this prior breakout, got upgraded, but didn't close out well. So I still think it needs to prove itself here. It was worthy of a try. Some people made, some people lost, and that's a problem with this market. It went from up to flat to down, and then it showed relative strength. It was up like 80, 90 cents, and then it just fizzled out. Like, where did they all go? So that's why you have to take your trade. You have to know what you want to get out of these things. And I know one of these days we're going to trim and trail our way again out of a red dog reversal type of bottom or some type of level versus level trade. And we're like, oh my goodness, we had that so low. That rally was real. But for every time it's not, you might as well book some money, put it in the bank, and that's what you do tactically. When we do get to a level, though, and it all lines up, perhaps we do get a multi-day trade, or maybe it's day one, and then we look for some kind of, new uptrend formula, which we haven't even seen start yet, so we don't want to talk like that. So there'll be a time and a place for that, and then maybe a portfolio approach again at some particular point. But right now, it truly is tactical approach. I was on the road today. There was a decent trade in the spiders while I was gone that I triggered from transit, and now, I'm long a little bit overnight. I'm not that comfortable about it. My small little gut tells me it might open up a little bit just for a tactical trade, but just small enough that I know that if we open down, I'll hopefully get a way out of it. And the level I really want to buy going across is this 153.55 to like 154 412. I would think that this would hold first, or maybe it trades into the gap and we get a nice red dog reversal here. If it happens in the next day or two, the rubber band is stretched enough that we could get some really nice bounce. If we continue to just grind back and forth, and not let us get drastically oversold, the bounce might not be that good there, and we might have to wait all the way to the 200-day. But overall, it's still risk down. It's tactical. You had a lot of caution signs in the last month, from the May 22nd outside day, the failure when Ben Bernanke spoke on Wednesday, to not holding the 50-day on Thursday. Now's not your time to get aggressive short, but again, pick your spots long, because we don't have to bounce it, and if you're not seeing it, cash is a position, and sitting on your hands can keep you sane. Two things to live by until you get more clarity. Scott Redler, T3 Live, see you at the morning call. Have a good one.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.